chapter 19 of ESG. Even I am also student preparing for the June attempt. So all the best everyone. Crack it. Sustainable development. Development that meets the needs of the present without compromising the ability of the future generation to meet their own needs is the sustainable development. So we can write this blindly. First one, sustainable development meaning though development that meets the needs of the present without compromising the ability of the future generations to meet their own needs. So sustainable development, social concern, people, environment concern, planet, economic concern, profit. So people, planet, profit. People, planet, profit. People is social concern, planet is environmental concern, and profit is economic concern. And corporate sustainability can be understood as conducting business to create value for present shareholders while protecting the rights of the future shareholders and stakeholders. Next, sustainability audit. When a program or activity is considered sustainable, if it meets the following criteria. First, creates the economic value, increase the public wealth and mechanism for its proper distribution, socially justified, environmentally sound, ethically conducted, and conforms to all the applicable laws, rules, and regulations. First, creating the economic value, increase public wealth and with the mechanism for its proper distribution, socially justified, environmentally sound, ethically conducted, conforms to all the applicable laws, rules, and regulations. Dimensions of the business sustainability: economic, environmental, social. Economic, environmental, social, governance, and ethical. Meaning of sustainability audit. So third one, a sustainability audit is a look inside the company to determine the most powerful way to practice the sustainability. A sustainability audit is a look inside the company to determine the most powerful way to practice the sustainability. Next, framework of sustainability audit. Sustainability audit typically follows a structured framework that includes the following steps. First, planning and preparation, data collection and analysis, assessment and evaluation, report generation, implementation and monitoring. So first, planning and preparation, data collection and analysis, assessment and evaluation, report generation and implementation and monitoring. So any of this step majorly ends with the implementation or monitoring or evaluation, same. So first, planning and preparation, data collection and analysis, assessment and evaluation, report generation, implementation and monitoring. The process of conducting sustainability audit. So the sustainability audit may be conducted in the following manner. First, defining the scope and objective of the audit. Objective of the audit. First, define the scope and objective, what you want to achieve. Next, gather the data. Depending on the objective you defined, gather the data. Next, conduct the assessment and evaluation. And prepare a report. Preparing a report. Implementing the monitoring actions. Monitoring the actions. Reporting and communicating. Next, sustainability audit process flow. First, define the scope and objective, gather the data, conduct assessment and evaluation, prepare a report, implement and monitoring the actions, reporting and communicating. Next, understanding about sustainability audit report. Understanding about sustainability audit report. The report typically includes the following key elements. So first, so they said key elements, right? So start with the key findings. So easy remembering for the purpose. Key elements, key findings. So first one was executive summary, background methodology, executive summary, background methodology, key findings, recommendations and implementation, the plan and conclusion. First, executive summary, background methodology, key findings, recommendations, implementation plan and conclusion. Executive summary, background, methodology, key finding, recommendations, implementation plan and conclusion. Next, audit standards on sustainability. There are several standards and guidelines that organization can use to conduct sustainability audit. Some of the most widely used include: first, GRI standards. Next, ISO 26000. Focus on ISO 26000 a bit more because in other subjects or in other chapters also they gave ISO 26000. Sustainability assessment standards, national and regional standards. 4. GRI, ISO 26000, Sustainability Assessment Standards, National and Regional Standards. GRI, ISO 26000, Sustainability Assessment Standards, National and Regional Standards. Next, importance of sustainability audit. A sustainability audit will serve two crucial functions. First, identify the important ESG risk and benchmarking the organization's sustainability initiatives against the competitors. So to benchmark against the competitors and to identify the important ESG risk. Besides this, Sustainability audit is important for several reasons, including first, identifying areas for the improvement, measuring sustainability performance, demonstrating commitment to sustainability, enhancing reputation and brand image, fostering innovation and competitiveness. And overall, sustainability audit provides a valuable tool. So first, identify the areas for improvement, measuring the sustainability performance, demonstrating commitment to sustainability, enhancing the reputation and brand image, fostering innovation and competitiveness. Next, part B, ESG rating. So in first para they gave ESG is a term used to represent an organization corporate financial interests that focus mainly on sustainable and ethical impact. And next, what are the criteria for the ESG? And each criteria of ESG plays an important role in the effort to increase the focus on sustainable and ethical investment. So don't go blank if they ask a question, what are the criteria for ESG? Criteria for ESG is ESG. So we have to write one intro line for E and S and G and start the points, means examples given, air and water, biodiversity. Go through it once. Meaning of ESG rating. ESG scoring system tend to be either industry specific or industry agnostic. Industry specific scoring system assesses issues that have been deemed material to the industry at large. So industry specific deemed to will assess issues that have been deemed to material to the industry at large. Industry agnostic, ESG scores tend to incorporate widely accepted factors that are meaningful across industries, issues like climate change, diversity and equity and inclusion. So if it comes to ESG rating, two things: industry specific, industry agnostic. Industry specific means material to the industry at large, and ESG agnostic means like climate change, being specific topics like climate change, diversity, equity and inclusion and human rights. And an organization final ESG score is typically a sum product of the criteria ratings and the criteria weightings. An ESG rating measures a company's exposure to long-term environmental, social and governance risk. This risk involving issues such as energy efficiency, worker safety and broader independence have financial implications. A good ESG rating means a company is managing its ESG risk well relative to its peers. A poor ESG rating is the opposite. The company has relatively higher unmanaged exposure to ESG risk. Means if poor ESG rating, company is bad in ESG related. If good ESG rating means company is doing well with respect to ESG. So key takeaways. An ESG score is an evaluation of an organization performance against various sustainability metrics. ESG scores are generated by the rating platforms where analysts evaluate corporate disclosures, conduct management interviews and review the publicly available information about an organization to provide an objective rating of the organization's performance. Scores are used differently by different stakeholders. Next, ESG key performance indicators. ESG KPIs are integral in understanding the ESG impact of the companies they invest in or are thinking about investing in, and thus the impact of their funds. ESG KPI also provide managers and investors with an idea of what risk their investment and funds face. Next, SEBI adopted the following approach in developing BRSR code. The KPIs sought in BRSR are quantifiable to the extent possible so as to facilitate the comparability of the disclosure. Next, it contains the factors that are relevant to both manufacturing and service sectors and are relevant in Indian context. The KPIs contain a number of intensity ratios so as to enable comparability irrespective of the size of the company. Next, in 2023, BRSR mandatory top 1000 and 23-24 reasonable assurance for BRSR core for 250 companies and 24-25 for 500 and 25-26 for 1000. So now we are into 25-26, so top 1000 companies. Next, the KPI of ESG are provided in the following table. So this is must. It will give a gist of the ESG. First, environmental, social and governance. Environmental policy, environmental impact, energy consumption, energy intensity, carbon emission, primary energy source, renewable energy source usage, water management, waste management. So, environmental policy impact, energy consumption intensity, carbon emission, primary energy source, renewable energy usage, water and waste management. Next, social. Monetary and non-monetary employee benefits, attrition rate, training and development hours, health care benefit, human rights policy and violation, child and forced labor, gender parity, local procurement, community and social work, governance, board independence, diversity, separation of powers, voting pattern and result, gender pay ratio, business ethics and code of conduct, supplier code of conduct, corporate governance, anti-bribery policy. On the basis of this, we have to frame a question. Next three boxes that only. Next, Dun and Bradstreet is an international business data and analytical provider which provides insights into the company's performance, trends and ESG factors. Through its ESG analysis, Dun and Bradstreet provides companies with a comprehensive view of their sustainability performance in relation to global peers. Next, Sustainalytics ESG ratings. ESG describes the ESG metrics that are evaluated to inform the security selection. Next, MSCI ESG ratings. MSCI ESG ratings are created by MSCI ESG Research, one of the largest rating agencies. These ESG ratings are released for 14,000 different equity and fixed income issuers. SCI ESG ratings. SCI means MSCI. ESG ratings are generally known to be one of the industry leaders in publishing scores, and means MSCI ESG ratings are the industry leaders, and MSCI rates companies according to their exposure to industry specific ESG risk and opportunity and their ability to manage those risks and opportunities relative to the peers. MSCI ESG ratings model seeks to answer 4 key questions about companies. First, what are the most significant ESG risk and opportunities facing a company and its industry? How exposed is the company to those key risks or opportunities? How well the company managing key risk and opportunities? What is the overall assessment of how the company is managing ESG risk and opportunities, and how does it compare to its global industry peers? The criteria covered by the MSCI under 3 pillars is given in the table format. First, environmental, climate change, natural resources, pollution and waste, environmental opportunity. In social, human capital, product liability, stakeholder opposition, social opportunities. In governance, corporate behavior. Next, Bloomberg ESG disclosure. Scores is an ESG data system that provides ESG information for over 11,800 companies in more than 100 countries. Their ESG data includes topics such as climate change, human capital, shareholders' rights. The ESG disclosure scores rank companies on their level of ESG disclosures and span key sustainability topics. The following criteria covered under ESG. First, in ESG, carbon emissions, climate change efforts, pollution, waste disposal, renewable energy, resource depletion. Next, social, supply chain, discrimination, political contribution, diversity, human rights, community relation. Next, governance, cumulative voting, executive compensation, shareholders' rights, takeover, defense, staggered boards, independent directors. Compare with the MSCI ESG ratings and Boomerang ESG disclosure score. The common points choose. Thomson Reuters uses more than 400 different ESG metrics of a subset of 186 fields are selected. The ESG criteria covered by Thomson Reuters is presented below. First, ESG, resource use, emissions and innovations in social, workforce, human rights and community, product responsibility and governance, management, shareholders and strategy. Next, FTSE results ESG ratings. The ratings are way to compare and analyze the ESG performance of the issuers. The ratings consist of 6 ESG categories. First, corporate governance, environmental policy, social policy, labor practices, supply chain policy, country of origin. Next, advantages of ESG rating. There are 5 main benefits small to mid-sized companies. First, competitive advantage, cost reduction, more attractive to lenders and investors, supply chain prospects, attraction and retention of the talent. First, competitive advantage, cost reduction, more attractive to lenders and investors, supply chain prospect, attraction and retention of the talent. Means they can attract the new and retain the old employees. Additionally, promote companies' growth and improves the financial performance, raises corporate transparency, strengthens the risk management, promotes stakeholder engagement, improves communication with the stakeholders. So, stakeholders related 2 points are there. First, promotes stakeholder engagement, improves the communication with stakeholders. Next, part C, emerging mandates from government and regulations, ESG reporting in India. So, here they gave historical starting from 2009 to 2021. Next, ESG, the way ahead. In this, as company prepare for an influx of new ESG reporting mandates and regulations in 23, there are 3 key changes companies should quickly establish to prepare the challenges ahead. First, appoint a chief sustainability executive. Appoint a chief sustainability executive. Second, create an ESG policy budget. Create an ESG policy budget. Next, assess the partners' sustainability practices. Assess the partners' sustainability practices. First, appoint a chief sustainability executive. Appoint a chief sustainability executive. Create a ESG policy budget. Assess partner sustainability practices. So we are done with chapter 19 as well. Thank you so much.